Video. Today we are going to speak about how to correctly leverage another position, basically how to increase or add another position. Now most of you might be familiar with this barcoding way of trading. We're going to discuss that, and I'll also show you guys exactly how to leverage and how you know when to leverage another position in the market. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content. Also, if you enjoyed the video, give it a thumbs up for the YouTube algorithm so that we can get more people to get hold of this educational content. Now before we get started, if you do have me on Instagram, you probably saw this morning then this Nasdaq trade that I've taken or published on my Instagram story. Now this is a breakdown that I did yesterday for you guys, and yesterday, and basically what happened was this morning I woke up and I took these positions on all of these trades, you can see, and I will leave a link in the description to that video. But it's basically a breakdown that I've done yesterday to say that the market was going to move down. And if you did get in here, you should have been, you should have gotten away with just over 3,000 pips on that move. And then also here was also another move to the downside on the US 30. If you did watch that video yesterday, that was another 4,000 pip move over there. And then the S&P 500 also basically moved about about 6 or 700 pips. We was able to get into all of those three. So if you got in there, well done. If you didn't get in there, make sure that you switch on that notification bell so that you can get in on a in the next breakdown, which is coming through tomorrow. If you watched that one for yesterday, you should know what the next move is going to be. Now let's go on with this very quickly. Now it's important to understand that the best way to leverage a position in the market is to make sure you understand which way it is that you are going. Now if you are a day trader or a scalper, you'd probably be on the 1 minute and on the 5 minute. If you are a swing trader like myself, we normally shift between the daily, the monthly, weekly, the daily, and then obviously the 4 hour as we need to look to enter into the market. But what I do want to do is I'm going to use the Nasdaq 100 for you guys as an example in terms of what it looks like. Firstly, you always as a trader, you always want to buy back to the previous price of structure. What that means basically is that supply and demand works as follows. Investors come in, they will either sell the price back to a previous a previous level of support, or they would buy the price back to a previous level of resistance. Now this is a previous level of resistance. I can see the market was bought back up to that level before the profit taking took place. So there's a good possibility that we could see the market go lower and go and test this level over here, and then from there we could potentially see, obviously applying the rules of the strategy that you use in order to get into the market there as well. Now it's important that you keep that in mind. If you are a scalper, you'd obviously be on the 1 minute. Now let's say that you are a day trader. Now day traders normally come on the 1 hour, 4 hour, it doesn't really matter. So let's assume this was you, right? Now it's important to understand there's two levels in the market. The one is known as a level of support and the one is known as resistance. And it's also important to keep in mind that there's a good saying that goes, you have to buy low and you have to sell high. Now you have to buy at support and you have to sell at resistance. So if you are looking to buy a market back to a previous structural level, you always want to look at buying at support. If you are going to stick, you want to buy always make sure that you buy at support. Support's created when the market creates structure. Now when the market creates a level of resistance, those resistance gets broken, that would be turned support. You always want to make sure that you buy at support levels in the market, and you know that support's created when the market creates resistance, break above resistance, then create support. That's where you'll be looking to buy every time you started buying at support. You're going to look at continuing buying at support, and vice versa for resistance there as well. Now let's say you applied a simple price action strategy and you didn't overcomplicate things by looking at order blocks, and and I know order blocks is support and resistance as well. But if you if you didn't want to be too fancy and go higher highs and higher lows, just talk about a lot of stuff that's not necessary. Now I'm going to just give you guys an indication. I'm going to use a naked chart because I'm not here to complicate things for you on this side. So let's assume that let's assume, right, this is where you wanted to buy the market back to, right? because that's the previous level of structure that you want to buy the market back to. If you were a swing trader, if you're a scalper, you'd obviously go on lower time frames. Let's say on the 1 minute time frame, you are a price action trader. Now I know exactly how price action traders trade. Now, firstly, what you'd obviously identify, you would identify this previous level of support. You would then get your first entry into the market right there, right? You'd be in the first buy. Now, the question is, people think this is cute. Yeah, like I'm just gonna say cute. People think this looks nice when you add 20 positions into one. Now, again, if you've got me on Instagram, you probably saw that I bought the Nasdaq here and then I sold the Nasdaq from that level up there once again as well. People think this looks nice. Now, this is not the way that you want to trade. Also keep in mind that you cannot just buy here and you cannot just sell there. You obviously need to make sure that you have you've got some other confluences that is stacked into your favor in order to make sure that you are trading in the right direction. You can't be looking at buying the Nasdaq here if if Jerome Powell is going to announce interest rate hikes, which is going to negatively impact the stock market, and the market's going to take it down. So you can always just come back to the channel and look for confluences that I do provide. So the important things that you do want to keep in mind is if you this is support, so you want to buy at support, and this is the previous daily structure that you do want to buy the market to, for instance, right? The only places that you need to buy is when the market goes high, comes low, prints resistance, break above resistance, and then create some sort of support. That's the only places where you are going to buy. You can only buy at support. So your first position is going to be here because the market printed an equal low, because it's support. You want to buy, you buy at support, and this is the lowest price that you can buy. Next up, what do we have here? We have a level of structure that the market had created over here. This level over here acted as a strong level of resistance. The market broke above resistance and it's now acting as support. That's where your second entry is going to be. So we go up and we go up and we go up and you look for structure. Here the market had a consolidation phase. This is going to act as a structure in the market. So we obviously want to wait for the market to break above that, and then on the retest we want to start looking for buying opportunities. We do have a massive liquidity week over here. Basically what we do want to wait for is wait for the market to go up, break below that. Unfortunately, we would have not gotten a position in here because the market never came back to test that previous level of resistance that is now acting as support. However, we do have this level over here that the market had also printed. You can see the market printed massive resistance over there, broke above resistance, and this is where you would have gotten your third entry. And then basically you would have applied this the same way, and then we go up further. Then you'd have been you would have had 3 positions in here, and then you'd have been taken out. Your take profit would have been hit there, and that is the way that I've traded this massive move up. There is a 7,300 pip move, and then if you've leveraged the position correctly, this would have been 5,700. That's over 12,000 pips already. And then your final position over here would have given you about 2,700 pips. Now that's more pips than the NAS boys would probably catch within 6 or 7 months down the line that you basically caught here in one move. Now, if you are going to sell, you're going to do the opposite of what you are doing here. Firstly, you would have probably got in there. You probably would have been looking to sell to this level, and you want to apply the same concept that you have on this side. You want to apply it on that side there as well. It's important that you do keep in mind that in order to manage these trades, you always want to go and make sure that the market doesn't create and break structure to the opposite side here as well. The only reason why the Nasdaq slightly pulling back is because the dollar index is losing value. If you are wondering why this is happening without even looking, the dollar index is trading at monthly resistance, so a pullback is expected from the market to go and test the previous level of resistance that is now acting as support. As a result of that, can expect some slight pullback on the Nasdaq 100, but this is not what we're here for. Okay, so one thing to keep in mind is to always make sure that you are trading at support. If you are buying, you're buying at support. If you are selling, you're selling at resistance, because you always want to sell at the highest price in the market. The same thing I've done here. I've sold the Nasdaq on here, I've sold the Nasdaq on there, but I'm out. Okay, well, not completely out. I've taken partial profits on here, but I'm out. And this is how basically as long as the fundamental data lines up with the direction that I do want to take, I'm going to continue to ride this wave to the downside the same way I rode this wave to the upside. Now, that is it from my side, guys. Thank you for your time. And as always, cheers for years.